We're now at the final session of the second IBCA Impact and Sustainable Investment Conference presented by Eversource Capital and NIIF. So we have a very special fireside chat right now. LP's perspective on investing and fundraising with ESG lens. May I introduce Padmanabh Paddy Sinha, Executive Director and CIO Private Equity, NIIF, and Pratibha Jain, Group General Counsel and Head Corporate Affairs, Everstone Group. Over to you.
Thank you, Shatapa.
Thank you, Shatapa. Hi, Paddy.
Hi, Pratibha. Good to see you.
Good to see you too. Good to see you in your new role. So congratulations. Already NIIF is talk of the town. We are very proud of how quickly NIIF's raised over $3 billion already for the Indian market. And you are now part of the latest buzz, which is the strategic fund, leading the efforts there. So before we start, I think a lot of you people are curious as to what is the strategic fund? How is it a differentiator from the other funds that NIIF already has?
Sure, thanks. Thank you, Pratibha. So yes, NIIF was launched about 5 years ago and started off with the infra fund, which is called the Master Fund. And that was the first fund focused around core infra. And then the second strategy, or the second fund, let's say, was the fund of funds business, where the idea was to create a sophisticated local LP anchor in India so that it can help crowd in capital and give confidence to foreign LPs as they begin to look at Indian GPs. And the third fund is the private equity fund, which is a classic private equity strategy. So really, NIIF is two elements of its strategy, infra and private equity. And the fund of funds is an indirect way of playing both of them. So this is the second leg of the NIIF strategy, which I'm excited to be part of, which is the private equity strategy. So I made perhaps a sort of a very brief introduction about NIIF itself would be interesting to the audience. So NIIF is a very well-structured, well-thought-through sovereign-linked entity. And you know, Pratibha, you've been involved right from the inception. So the conceptualization was very sharp. You know, while it's a sovereign-linked entity and the government is the sort of anchor, the government ownership of NIIF Limited itself, which is the manager for all these three funds, as well as the the anchor of these three funds, is 49%, and about a few additional percentages owned by private Indian banks and financial institutions to make it Indian owned and controlled. So NIIF, the manager, is more than 50% held by Indian institutions, including the Indian sovereign. And the balance shareholding is actually with some very preeminent names, which are sovereign and pension funds from Canada, US, Middle East, Singapore, and Australia. So the roster of shareholders of NIIF is an unparalleled one. I've never seen something like that. And obviously the ecosystem they bring to bear and the learnings and knowledge they bring to bear is fabulous. So that's what makes the strategy very exciting. In terms of, my own background, I've been in Indian private equity since 2002. I was an early tech entrepreneur during the dot-com days, but having been in private equity and largely with Temasek and then Tata's, this seemed like a sort of a natural new home when I was contacted for this position. While I was looking at something different, it was very exciting because much in line with the theme of the conference, for me, it was a double impact for me, or a double return, because it was not just about continuing to do private equity and hopefully making good investments and working with entrepreneurs and helping scale up their businesses, but also the whole theme of working with a sovereign-linked entity. So the Strategic Opportunities Fund, which is the private equity fund, or SOF in short, Strategic Opportunities Fund, is really a classic private equity fund targeted at a little over $2 billion. We've already done our first close, a little over $1 billion. And the idea is to have a homegrown private equity player at scale, really. So a lot of sort of now, as we're looking at it, Indian businesses are becoming fairly large and raising substantial amounts of capital. And while they are, or enough providers of capital to them, with the global firms being there, but a few of them have a buyout focus, may not be looking so much at growth capital for these entrepreneur or professionally led businesses, or some of them may prefer a homegrown partner for various reasons. So that's where NIF plays a unique role. It's our sweet spot for deals would be between $100 to $300 million deals. So I don't think there's any other Indian private equity player which operates in that segment, and that's where we have a unique position to play. And the idea is to really institutionalize, as we work with these entrepreneurs or management teams, to really institutionalize sound governance, bring in operating excellence, really help them scale up and bring in financial discipline and grow with them. Hopefully, these all companies would become segment leaders or among the top couple in their segment. And that's where we would feel a sense of satisfaction in our jobs. Well done if we succeed in that. So if we create a number of these sort of segment leaders, or call them national champions or whatever suits you, but providing significant scaled up capital to them to grow.
As far as I know, NIF, there is nothing classic about what they do. There's always an angle. There's always a difference.
Yeah.
So it sounds very interesting when you say that NIF is doing a private equity fund. I'm sure that differentiation is going to be very specific in terms of deepening the markets that's the impact NIF has had in the past. So I'm sure there's like a deepening the market impact angle to this.
Sure. No, so that's why, Pratibha, I described it as classic private equity plus. The classic part of it is important also because ultimately, I think if you want to build a platform which lasts hopefully a very long time, you also need to make returns for LPs, for them to come back and for more LP capital to come into India, and ideally through the sovereign linked manager and vehicle. So I think there's already very distinctive positioning and very strongly differentiated elements to NIF. Firstly, there is no Indian manager which will have potentially hopefully with the strategic opportunities fundraising completed as we start off on our global fundraise segment of it, more than $5 billion under management already in a very, very short period of time. So it's got a unique position as a homegrown private equity manager with this sort of scale, with a focus on both infrastructure and private equity. But within that, as I told you, the idea is really sort of scale up and create segment leaders. I think you're seeing a lot of smart entrepreneurs or smart professional teams today, which may have spun out of their jobs, and they would be very nimble, very innovative, creating sort of future-proof, transformational businesses. But as they go above a certain scale, often, the dilemma for them is, do they have the capital to compete with the large corporate groups, be it Indian or global? And rather than having to look at potentially selling out to these groups, they have the chance to really build out independent, entrepreneur-led or professionally managed companies. And that's where I think NIF has a unique role to play if we can succeed in doing that, because that will help bring up a whole new layer of independent businesses which are large market leaders, and help democratize sort of businesses in India, help bring more innovation, more nimble businesses in there. So I think there's lots we can do on that front. And of course, on the theme of the day, there is also some angles we bring to the fore, which we can talk about.
Sure. So actual Atmanirbhar strategy there. So on the theme of the conference,
different people can have different terms for it, but I guess the end goal is something that we could all agree with.
Absolutely. No, as long as, there's more liquidity getting into the market, for the Indian entrepreneurs, that's always a good news. So just getting to the theme of the conference, increasingly, we're seeing you're actually right in the process of fundraise. So what we are seeing is ESG compliance is not an option or a good to have anymore, but pretty much a mandatory condition for fundraising now. You even heard the government of India's focus on it in this conference today itself. Has your experience, given your fundraising, been the same? Just help us understand what the LPs are thinking in terms of ESG and where the market is.
Sure, Pratama. So firstly, I would say a truly authentic approach to ESG has to come from within. It's not going to be LP driven. So for us, it is, and there's enough that we put on the ground there. So we're very clear that it actually helps identify risk as well as growth opportunities by having an ESG prism. So we have actually a specialized team of 3 people and growing within NIF Limited, within the manager, who are ESG focused resources. And in addition to these 3 people, within the portfolio companies and platforms that we've been rolling out between various funds, we have about 30 people in portfolio companies who are ESG focused. So that sort of scale is something that you would not have seen anywhere before. Definitely not in India. I don't know how many others have done, have invested in ESG to that extent. So needless to say, the ESG analysis is a key part of our investment analysis in addition to the financial analysis. And that's where these 3 people in NIF play an important role. We actively building sort of our ESG, integrate ESG into this analysis, and this is actively taken up at the investment committee discussions. And the idea is again, to identify both risk and opportunities which are ESG related. And then assuming that the company meets our filters or the business meets our filters and we go ahead with the investment, the journey doesn't stop there. Even if it's a minority investment or if it's a control investment, then in conjunction with the management team, or if it's a minority in conjunction with, again, the management team and the entrepreneurs, we decide and agree on certain ESG related goals and milestones. And then even in minority deals, we do help the portfolio company bring in at least one ESG resource who works towards these, because often the rest of the management team will have their hands full with their daily lives and will not be able to work actively. And then monitor the achievement on these goals alongside as we move forward. So, LP criterion apart, I think what we're doing is perhaps significantly more than most investment managers or GPs are doing today. And that's where, I told you about the 3 people in the manager and 30 people in the portfolio companies, and both numbers are growing. The portfolio company will obviously grow faster as we continue to add portfolio companies as well. So it is become a pretty important consideration during our investment and then in monitoring post.
Wow, very interesting. But when you say you've got 3 people and then at the portfolio level, significant number of people focused on this, there's obviously a cost attached to it. So when you're going out and marketing, are you marketing it as a lower return product, or is it just do you get that extra for for having all these compliances in place?
No, yeah, I think a very simple answer to that is it makes for more robust returns. It doesn't compromise returns at all, which is why I told you it's classic private equity plus. It's not taking away from any of the ingredients of classic private equity, be it commercial, professional orientation of the team, which makes the investments, monitors them, exits them through the life cycle, which long-term alignment of interest to the team with LPs, or any of these other parameters. So our goal is that our LPs should make attractive risk-adjusted returns from investing with NIF in the Strategic Opportunities Fund and the other strategies. And in our minds, this sort of ESG is sort of a natural fit with private equity. When you're investing for about 5 years plus, to my mind, the E part of it is a no-brainer. Because you want to invest in businesses which are future ready and future proof. To pick an example, if you're investing in a business related to the automobile sector or the component sector, you would not want to, even if it's available at a cheap value, you wouldn't want to invest in a business which is dependent completely on the ICE engine and is not meeting future emission requirements, etc. You'd want to be investing in businesses which would be beneficiaries as a gradual shift happens towards electric, as emission norms become tighter, and therefore look at businesses which benefit from that because you're investing long term. So similarly, the governance part of it is even more so a no-brainer. You want to be in businesses where there is transparency, because ultimately you are a manager, you have a fiduciary, and you will have other shareholders sitting alongside you. You would want the highest quality governance, the best leadership, best transparency in that business. Similarly, on the social front, whether it's employees, customers, suppliers, or the community, a thoughtful approach on all those fronts, given your long-term investor, is going to be helpful because it builds loyalty, it builds the brand, and it only positively affects your returns. So in our minds, this is about making your returns more robust, in the sense that it's also identifying risk and mitigating risk. And there is growth opportunity linked to it, linked to your brand, linked to your loyalty with various groups of shareholders. Even on a cost side, so if you look at the basic metrics of a business, we believe revenue growth will be stronger in ESG compliant businesses for obvious reasons. I mean, you're looking at investing for 5-6 years in future ready businesses. On the cost side as well, whether it is operating costs or capex costs long term, if you have an ESG lens on, long term, we think even if in the short term you may need to invest more, long term they'll be beneficial. On regulatory legal compliance costs, again, you're a lawyer, you'll understand that it'll only help mitigate risk and potentially costs associated with it. And finally, in terms of just employee retention, loyalty, and all those elements, as well as your ecosystem of both suppliers and customers, treating you as a valued long-term partner, and ESG orientation is only helpful. So the answer is, we believe it builds the case for more robust returns, and there is no trade-off between returns and an ESG focus.
No, you're absolutely right. I think, it was so interesting to hear the previous panel, just talking about the economics, how it economically also totally makes sense to, have invest in businesses that look at gender inclusion, diversity. There are enough and more written about, how this actually adds to the economy as a whole, and then obviously, at a micro level to the businesses. In fact, in our discussions with LPs, we have seen that, our focus on SDG, which is, one step even above ESG, and just making a more positive impact framework for your portfolios, even further helps, providing an economic viable product. So it's only increasing, and the co-linkage, as you were saying, between the economics of it and the governance and the inclusion piece of it all seems to be going hand in hand, which is a perfect place to get the world to. just the last question, on impact versus ESG. So we already have an impact fund where you guys are an anchor, NIF is already an anchor with Eversource. So in terms of differentiation between ESG and impact, and somewhere SDG in between, these are words that are used in our industry very loosely. Where are you seeing yourself at?
So, if you talk about the Strategic Opportunities Fund and the private equity strategy, our focus is, we are in the first fund of this strategy. So returns are paramount for us. So, and we believe an ESG focus only helps those returns. So companies have to meet our ESG parameters. It's an intrinsic part of our investment committee approval process, etc. And as I told you, we put our money where our mouth is. We have dedicated resources to do that, and then post investing, we are very actively engaged in actually monitoring it. It doesn't get over at investing stage. And I'm not an expert on this, but by impact, and an impact has a great role to play in India, because in a poor country like India, whether it's improving access, there is a big market there, right? There is a big middle and lower middle class to be serviced and served and more effectively. But our own play is a classic private equity fund with an ESG focus. We are not an impact fund, if that's your question about what our strategy is. And that's where I think people like you have some mandates around that. And I think they all have an important role to fulfill. And India is a big market with potential for both impact and ESG or players to make a difference.
No, you're absolutely right. I mean, I think we'll need capital at all levels. And I think NIF is just making sure it covers all the various aspects of it. So that's wonderful to hear. Just very quickly, lastly, because this is IVCA, NIF has always been at the forefront since it's been established in helping grow the Indian funds industry. And you have a principal strategies group, which is to me a huge impact. If you talk about impact strategies, just quickly, if you want to talk about that.
Yeah, so we do have a strategic and policy advisory group, but otherwise also at the senior level at NIF. Both Sujoy and I have been playing past roles, and Sujoy continues to be on the executive committee of IVCA. I was chair, as you know. So I think there are matters which are close to our hearts in terms of working closely with government and regulators to provide to make a more robust private equity venture capital ecosystem in India. And I think lots of good has happened, and hopefully will continue to happen in the next few years to make for that robust ecosystem. I think the benefits to India are a no-brainer on that front. But as you said, we also have a strategic policy and advisory group within NIF, which actively engages on some of that in addition. So I think these are all good initiatives, and IVCA, of course, is representing the 100+ stakeholders, GPs and LPs, the private equity venture capital funds more, I guess. I think we have to get the latest update from Rajat, which he must have given, but I think there are about 130, 140 members, which includes PEVCs and LPs that they represent.
Yes, no, they're doing a fantastic job. I think on that note, I think I'm getting warnings from Shutapa that we are out of time. But thank you so much, Paddy. We're all looking forward to your new stint and you making waves and helping the market grow. So look forward to it. And thanks for taking the time.
Thank you. It was a pleasure, Pratibha. And thank you for all your support. And hope to make a difference. Thanks, Shutapa.
Thank you so much, Paddy. Thank you so much, Pratibha. It was a wonderful fireside chat, and that brings us to the end of the second IVCA Impact and Sustainable Investment Conference presented by Eversource Capital and National Investment and Infrastructure Fund, NIIF. Thank you everybody who's joined us today. We've had a wonderful 5-6 hours of brainstorming ideas, and I think the roadmap is just a bit more clearer. And do feel free to send your feedback to the IBCA team. You can email them at info@ibca.in. IBCA now has over 200 members and is growing from strength to strength. Working with government and regulators remains on their top priority. So do stay tuned for future IBCA events. The next big one comes up in October, IBCA's Global LP event. So do stay tuned for that. Thank you once again, everyone, and have a great evening. Bye.